Investment advisor and Bitcoin strategist Plan B is extremely optimistic on the 2022 outlook for Bitcoin. He announced some good news for all enthusiasts of Bitcoin on Twitter. Plan B has updated us on how quickly Bitcoin will reach $100,000, and he appears to be optimistic. Let's start with a tweet from the Bitcoin analyst about the current forecast. His iconic stock-to-flow methodology, as well as the market cap peak for 2022, are among the Bitcoin analyst's tweets about the current estimate. Plan B's prediction of Bitcoin going to $100,000 is incumbent on the realized market cap of $750 billion.
Bitcoin is so volatile, it gets attacked for that attribute, but with the volatility comes a return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock-to-flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock-to-flow model and Plan B is the man, the myth, the legend. But when it's down, and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019 when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing, and investors and people in general seem to forget that it's just volatility. And the overall trend, if you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, I guess it's a question of perspective. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. So to try to predict or evaluate Bitcoin it must be a very rough estimation. And you're right, the stock-to-flow model is very rough. So stock-to-flow is basically saying that if an asset is scarcer, it should be more valuable.
Unlike gold, the rate at which Bitcoin's supply grows will constantly decline, eventually reaching zero once the currency's limit of 21 million coins is reached. Bitcoin's high still remains at $69,000, which we saw last November. If it surpasses that, most analysts say the upward trend will likely rise until Bitcoin reaches 100,000.
Well, how do you quantify scarcity? There is a known measure, that's the stock-to-flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock-to-flow ratio is 60. So the scarcer an asset, the higher the stock-to-flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables, any other factors to value the Bitcoin. It uses that same scarcity to value Bitcoin. So it's very rough. It's very not precise, and I guess it would not be very usable for trading. More than investing. So it's really a very rough compass, if you will, for investors. There's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And currently, obviously, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise, and the Fed has, spoken about tapering, about cutting back on the quantitative easing that helped any asset increase in value, if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. But so that's clearly what's going on right now. And by the way, I think they're just talking the talk and not walking the walk. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, it's they won't run that risk. And but it will be a very interesting couple of months, and that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.
Are they higher today than they were 2 years ago? And if they are, has your view of risks associated with Bitcoin evolved since we last spoke about a year ago?
Well, yes and no. I think there's a lot of risk out of the system right now. So there was a risk of, for example, before the halving, there was a risk that, there was another mining death spiral. So that miners and Bitcoin would not survive the halving, where the revenues for the miners would halve. But we obviously survived that. And then there was this big risk of China banning and China attacking Bitcoin. Well, obviously that risk has gone as well, because China is no factor of influence anymore. They stepped out of the Bitcoin market and pushed all the investors and miners away. So I guess there's a lot of risk that was in the market 2 years ago that is gone right now. On the other hand, I think Bitcoin is one of the last assets that is, for example, not supported by the central banks, like stock markets is. So there's a lot of volatility in Bitcoin, and I think it's here to stay. So there's a view that, like all the big tech stocks like Amazon and Google, that all the volatility and risk is in the beginning, before the IPO or just after the IPO. There's a lot of legal risk. There's a lot of technology risk about a new technology making it or not making it. But I think, and then later on, if the adaption kicks in, then that risk goes away. And a lot of people, a lot of investors view Bitcoin that way. So right now we're a little further in the adoption, and the volatility should go away. But I think Bitcoin is volatile by nature, so there is a chance that it will not be the same like all the high-tech stocks, Amazon and Google, and so that the volatility will stay. And that is also the source of the high returns, and because it's a double-edged sport. If the volatility goes away, the returns go away. So, but personally, I hope the volatility stays, and I think it will.
Despite the fact that Bitcoin lost about half of its value during the meltdown that followed the November peak, its market cap has remained nearly unchanged. The market cap is trending near to the all-time high, as Plan B predicted in his tweet. This could signal that the holders of Bitcoin are really steering the price, and if the trend holds, Bitcoin could soon be worth $100,000 or more. Plan B says both stock-to-flow models and logarithmic regression point to 100,000. He says that he is one of the few who thinks we're in a normal cycle, and that we'll go down again after the all-time high, and that everybody hopes for the super cycle, or for the hyper-Bitcoinization to start right now, and that we do not have a big crash after next all-time highs. But as much as he hopes that we don't see the crash, he thinks we will. Plan B thinks we'll be managed by greed right now and by fear later on, and see another minus 80% after we top out at a couple $100,000. Let us know in the comments section down below what you think about Plan B's price prediction and where you think Bitcoin is headed in the current market. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.